Now let's do the sample paper question based on cash flow statement. Again, this year, all questions of 2026 sample paper are really good. They are comprehensive ones which are giving you good practice of the adjustments which we usually ignore, which are usually not tested. So we are not used to taking them that seriously. So you are given balance sheet for 2 years, 24, 25. Then they have not asked you the full thing. They have asked you operating profit before working capital changes. So that means a part of operating activities they have asked, and they have asked you full financing activities. Let's look at the items, let's look at the adjustment and try to understand the impact of each. We should always read the adjustments quickly and then come to the normal questions. New equity and debentures were issued on last day of current year. So issue of share and debenture is on last day. If we need to give dividend or interest, we need to know this. Debentures were issued at a discount. So whatever is amount of increase of debenture, that's not the actual increase. There was a discount. So amount cash received would be less than the change which is taking place in debentures. Dividend is paid on preference shares and interim dividend is also paid. So you've paid two dividends, preference and interim. Interim is paid on equity shares. Date of payment last day of the year, but on what amount to be paid is dependent on date of issue or redemption of these. Then you're told preference shares are redeemed. So preference shares can be redeemed. These are redeemed. These are redeeming, changing on first day itself. So first day itself 5 lakh became 4 lakh. So throughout the year we had 4 lakh. So when we return, we are returning them at premium. 2 points to be taken note of. I'm not giving 1 lakh. I'm giving 1 lakh plus 5,000 to them. Secondly, throughout the year I had debentures of 4 lakh. So dividend will be given on this 4 lakh. It will be 10% of 4 lakh rupees, not 5 lakh. Because on the very first day, this change has taken place. Whereas in case of equity shares, it was issued on last day. It was issued on the last day, so throughout you had 9 lakh equity shares. Similarly, debentures were also issued on last day, so throughout the year you had debentures of 3 lakh. These are key amounts you need to remember for calculating certain things. Equity share capital, issue of shares, no problem with that. Then you are told preference shares are increasing, reducing, redemption is there, and we have seen we are paying dividend on that also. Then you are given cash credit. Cash credit is, like, you can say in simple word, one of the sources of finance, common sources of finance. So this is coming under financing activity of raising 1,50,000. What is this 6 lakh and 2 lakh? This is the surplus statement of P&L, profit after tax, which we start with. Then we have 12% debentures, then we have bank overdraft, and now we have outstanding interest on debentures. Let's understand what is this outstanding interest on debenture. We had to give interest on debenture, but we were not able to give it to some of them. So that means whatever is your interest on debentures, out of that, outflow of financing to reduce by 3,000, which we have not paid. Clear? So what happens next is, let's try to solve this. Let's come down. First we have taken, this is, we will be taking profit after tax, the dirt part which we do. So 8 lakh minus 6 lakh, 2 lakh is your profit after tax. Now I have to add here D dividend, I interim dividend. There is no R and T tax in this question because this is a part of the information of the question. You're not asked full one. So from here, do we have dividend? Yes, we have two dividends. One normal dividend on 4 lakh 10% because the date of issue was or redemption was such that throughout the year we had debentures of 4 lakh into 10%. Similarly, equity share was issued on last day. Throughout the year we had 9 lakh. We are giving them interim dividend of 15% on that. So when we add these two amount, we get profit before tax of 3,75,000. Now I come to my operating activities. This profit 375 is my profit before tax. Add to this premium on redemption. It has to be like we have goodwill written off the where we add those non-cash non-operating items. We will add premium on redemption of preference shares, interest on debentures. Let me show you the amount are how much. Debentures are uh, 3 lakh, they became 4 lakh. What is the key amount here? 3 lakh, because throughout the year I had 3 lakh. Rate is 12%. 3 lakh into 12% is 36,000. Interest is 36, but what I have paid is 33,000. Here I need to write the amount I have provided from P&L. This has been provided. So what I will add here is in wild, which we will add here the amount of rupees 36,000. Similarly, discount has to be written off in that year itself on debentures. We have learned that they were issued at a discount of 5%, so that 5% goes here. So then we get a operating profit before working capital changes of 4,21,000 by adding all these. Now let's come to the financing activity. In financing activity, we have issue of shares 3 lakh. We have redemption of preference shares as outflow. It's at 5% premium, so I return 1,05,000. Issue of debentures is a discount. So this is premium on redemption. This is discount on issue, which is changing the amount to 95,000 and not 1 lakh. There's an increase in bank overdraft and cash credit. I put that difference here. Dividend paid on preference share we calculated as 40,000, 4 lakh, percentage of 4 lakh. Interim dividend on equity 9 lakh into 15%. We pay that here, and this was 4 lakh into 10%. So these two dividends are paid, but when it comes to interest on debenture, this 3,000 is outstanding interest on debenture. So what I am actually giving cash outflow is taking place of 33,000 rupees. Total of these gives me 2,57,000, which is net cash flows. Even if you don't have time being a last question or any reason you are confused, whatever you write here, each might have significance, have marks of weightage of half mark. So write that and get those marks at least. Thank you. Let's practice one more question based on the same. Look at this question. Now cash credit, this will go to financing activity, the difference. Bank overdraft, also financing, both are inflows. Equity share, inflow. Preference share, outflow, because this is redemption. Debentures, inflow. So all these come under financing activities. You are told that equity shares and debentures were issued on 1/4/24, that is opening date. So that means throughout the year we had 6 lakh equity shares and 550 debentures. Preference shares were redeemed on last day. That means throughout the year you had 2 lakh worth preference shares. Interim dividend is paid on equity shares. Now here comes a question. What are they saying? Interim dividend on equity shares. Let's compare it to the previous question. The previous question tells me is that preference dividend is paid and interim dividend is paid. Let's look at that wording. Dividend on preference share and interim dividend. That here it only states interim dividend. Interim dividend is paid during the year. So if if normal dividend is paid, it is compulsory to pay preference dividend first and then this. So here, do we need to give 5% as dividend is a question of concern. Question should have specified. As the question has not specified, we will not give preference dividend. Then debentures are issued at discount. That means debentures are not issued of 1 lakh but of 95,000, same as previous question. And equity dividend is 6 lakh into 12%. This is an outflow. Then preference dividend is preference shares are redeemed at premium of 10%. So preference we are giving 1 lakh 10,000 to them, and equity shares are issued at par. If it would have been issued at premium, that would have also premium part would have been added there. So these are the financing activity. In this question you are not asked operating, only financing part is asked. Let's move on to the next part. And I have put another question here, same as the previous one, but only change I have put here is preference shares are redeemed at premium, interim dividend on equity, and preference dividend was paid. So here you will pay on 2 lakh 5%. Okay, you can see the difference in the both. If it is mentioned, if it would have been normal dividend, final dividend, it is obvious that we have to pay the other one. But if it is interim dividend, then it is not obvious that we will give preference dividend. Please remember that. Understand this in these questions. Thank you.